Hi guys, so right here in this video I'm going to teach you the simple concept I use to determine when the market is oversold for a bearish market or overbought for a bullish market. Let's say the market has broke structure to the upside. How do I know it's time to sell into the origin that caused the break of structure, or the market is bearish and the market has broken structure to the downside? How do I know it's time to buy to the origin? So I'm going to teach you that in this video. So let's say the market is in an uptrend this way. All right, so how do I know it's time to sell to the origin that caused the break of structure before we continue buying according to the trend? All right, or using a bearish market as a case study. Let's say the market has been bearish, we just broke structure. How do I know it's time to buy into the origin, or do I have to wait till the market gets to the origin before I sell according to the trend? So if you've watched our previous video, you'll notice that after a break of structure, we find the origin that caused the break of structure. Then we trade into the origin using order flow, or we trade outside the origin using order block. All right. To determine that, the simple concept I use is this. After the market gives us a break of structure this way, all right, now going up like bullish, we'll notice definitely there are going to be internal structures. All right, this way there are going to be internal structures. Now when the market breaks structure, remember this is the last high that broke the structure. All right, so what I want to say is the market to take out two lows. All right, this is the first low, the second low. So when the market takes out two low, then I consider the market overbought. Then we'll look for a way to sell the market into the origin. Definitely we'll look for the origin that caused the break of structure or the change of character. Then we sell into the origin before we follow the trend. All right, so let's do that for uh sell. So when we have series of break of structures to the downside, now to break the next structure, definitely we'll look out for the internal structures. All right, so once the market breaks structure, I want to see the market takes out the two lows, then return back to the origin that caused it. We can then buy to the order block, follow the trend and sell. Do you get that? Now, why must it be two lows? For a change of character to happen, the market should take out two lows. What do I mean by that? Remember how we trade it here. Once we have a break of structure, we look for internal liquidity, or we wait for an external liquidity to validate our order block. It doesn't happen always, but once we see setups like that, it is an A setup. All right, so what we want to say is the market to give us an extension, all right, then comes back. This will serve as the liquidity the market will take out to buy. So this is a buy side liquidity. Tap into the order block and buy. Do you understand? So why do I say the market should take out two lows? Now let's say the market is in an uptrend still, all right, and the market is giving us internal structures. Do you understand? Then takes out this high as a break of structure. Now the market can come back. This will serve as a liquidity. Takes out this low, tap into this order block and continue buying. Do you understand? So to label this internally, we have a break of structure right here, and we have another break of structure. So the first serves as liquidity, then this was the other block. Do you understand? So this is the reason why we want to see the market takes out too low before we consider that a market structure shift. Do you get? So I'm going to show you an example of this playing out. So for our example right here, we are going to use GBP card. Okay, so firstly, how we do the trade, we check the trend. The first thing we do is to verify the trend. So looking at the trend right here, we can see that obviously we are in an uptrend. The market is giving us series of higher highs and higher lows. So the next thing is to look for the recent trend, the last break of structure to the upside. So right here was the break of structure to the upside. Okay, so the next thing is to look for the origin that caused the break of structure. So we had the origin right here. So this is the origin that caused the break of structure. Now, this origin is very interesting because it swept liquidity, okay? So meaning that this low is said to be protected. Now, because the market swept liquidity previously, we have a pile of liquidity right here. This is a pile of liquidity. I see the market takes it out. Why is this a pile of liquidity? If you understand the concept of head and shoulder, you understand that this is a left shoulder, this is a head, this is supposed to be a right shoulder for those that trade patterns without context. Do you understand? Just to point out, strategy is powerful when it's in line with the trend. So if you just trade pattern, you see a break of head and shoulder and you just pick it anywhere without knowing where the trend is, it has high chance to fail. Do you understand? So this is a pile of liquidity and the market takes it out. So you have to label this as a liquidity the market will sweep. All right, so we're expecting the market to pull all the way down here, then buy. Now, to verify if we are in a good place to buy, to sell or rather, because we are looking to determine if the market is oversold, we have to know where the market is sitting. Because we are in an uptrend, we have to sell at a premium level and buy at a discount. So let's verify. So from swing low to swing high, we found out that as of when this played out, we are still sitting at the premium level. So it's a good, when we see an entry here, it's very good to sell into the discount level so we can buy. Do you understand? So we head to 4 hour time frame. So right here in 4 hour time frame, this was the break of structure. So that was the candle that caused the break of structure. So looking carefully, like what I illustrated with the line chart, this was the last break of structure to the upside. All right, so the low, we considered it a liquidity. Now looking backward, I can picture this break of structure right here, or better still, if we are looking for more context, we will call this the break of structure because it has imbalance that has not been filled. So we notice the market gave us a market structure shift. So meaning I will consider this market oversold, overbought rather. I will consider this market overbought. Do you understand? So when we have a market structure shift, we look for the origin that caused it. So this is the origin that caused the break of structure to the downside. And if you look closely, we have this as a pile up liquidity. Why? Because you see the market gives us a break of structure right here, a break of structure. This has intention to keep going up but failed to the downside. So that's a pile of liquidity which the market will take out to head to our direction. All right, so label it as a pile of liquidity. Now that will remain a pile of liquidity provided this market did not give us another break of structure to the downside. So if this had been a break of structure, then this high will serve as a sell side liquidity which the markets will then tap into our origin and sell. So if this will be a pile of liquidity, then this will be a potential point of interest because we already have a liquidity the market will sweep. But since the market didn't take out this low, that means this is the pile of liquidity. All right, so head straight to 2 hour time frame just to see things more clearly. Now looking at this very carefully, you see that this is the pile of liquidity like I mentioned. So anything above our pile of liquidity is considered our order block. So we sell from here and our stop loss here. So this was the place I sold from when I saw this trade, I was a bit in haste, so I didn't pay attention. It was when my SL was hit, my sense came back. But nevertheless, our SL goes here above the high. Then we should target this high right here. This is the place the market should take out. But since the market is retracing, the market is definitely looking for a supply zone to continue that trend. So keep this aside. So go to 1 hour time frame to see what's going on. Now, looking at this carefully, I can see that the market swept liquidity right here. So I'm very interested in that high. Alright, I'm very interested in that high. So this other block, I'm really interested in it. But I'm going to keep that aside. We have to stick to what we trade. So looking at it, we have this as the last break of structure. We have this as the liquidity the market will sweep. So meaning this high is not to be broken. Alright, so this supply zone, whatever the market wants to dance with, should not take out this high. Okay, so if it takes out that high, definitely we reposition and know what's happened. But that is the supply zone, because the market has taken out sell side liquidity. So target the high, the low, which is the overall target. So yeah, this is the simple way I determine or know when the market is overbought for a bullish market and oversold for a bearish market. So I'm going to give you one more example, and that will be Eurochef. Okay, so we repeat the process. Firstly, we find the trend. Now looking at the trend, we know that the market is bearish, and this was the last break of structure that happened. So our and looking carefully found out that this high swept liquidity. Okay, and also the extreme high also swept liquidity. So we have valid order block above there, which is not our problem for now. So the next, we want to verify where the market is sitting. Is it sitting at the discount level? Because since we are in a downtrend, we want to buy from discount level to premium, then sell from premium in line with the trend to discount level. So we verify from swing high to swing low. So we have the market sitting at the discounted level. So we want to find a way to buy into the premium level. So looking at the price very carefully, we found out that the market from this zone gave us a buy, then retraced. So there is an order flow that caused this buy to get. So we are going to look for that order flow. So using our Fibonacci retracement to determine it, we have it this zone. So our order flow, because after there is no candle that mitigates the 0.618, so that would be our order flow. So if there was a candle after this sell, this buy that mitigates the 0.618, the 0.786 becomes our order flow. All right, so I have this as an order flow. So go ahead to delete the Fibonacci. Now looking at this order flow mitigation carefully, found out that after this we have a break of structure to the upside. Alright, a market structure shift. I found out that this low take out this high, or it took out that low. Alright, so meaning the cost of this market structure shift is sitting anywhere around this zone, this gets. So we head straight to 4 hour time frame. So right here in 4 hour time frame, looking at it carefully, we have this as a break of structure, the last break of structure before the market gave us a market structure shift. Then we have this break of structure following. Alright, so we have this as a liquidity, and we have this order block. Alright, so the market went ahead to give us a market structure shift. so meaning the market is overbought. And this other block is valid for me because it swept liquidity to the left. So meaning since the market has given us a market structure shift, we look for the origin that caused it. So the origin is sitting around here. This is the imbalance. Then the other block anywhere across it. So we go to 1 hour time frame to verify the last imbalance. So we have the imbalance, the order block right here. Anything above that zone is our order block. So place the sell there. Then we'll have a sell right here. Now if you look closely, before the market took out this low, it gave us a pile of liquidity right here, which is a sell side liquidity. So the market has swept liquidity to the downside, and of course you can see the reaction right here, takes it out. Do you understand? So we have a sell here. Our stop loss goes anything above the zone. Just like GBP card, we target the low, and here we have it. So the market is currently on our AOI, area of interest, so we are looking for a reason to join this trade on a buy if it's still valid. So yeah, this is just the simple concept on how I verify if a bullish trend is overbought or a bearish trend is oversold. Then we look for a setup into our origin. So if you find this video anywhere helpful, do well to like, subscribe. If you have any question, drop it on the comment section and I will attend to your question. Follow me on social media. At Instagram is MimiFX. Reach out to me on Telegram, MimiFX also. So yeah, if you need someone to guide you in Forex, if you are struggling with entry, bias, or context, then my number will be in the description box. You can reach out to me on WhatsApp, on Telegram at MimiFX. So yeah, that being said, thank you for watching. I hope you find this video helpful. See you on the next one. Bye.